Good day, everyone. Trust you're doing well today. So, the bull run we have been experiencing of late, kind of extended its historic rally, adding 3.94% to close at 724,000 last week. That's a new all-time high in the history of Nigeria stock market. Well, congratulations to all investors because we made history together reaching this milestone. But seriously though, think of this bull run like a Kenyan athlete, running a marathon. He is running forward. However, at this point, he is beginning to feel some burn. So why am I saying this? Well, volume has been dropping. Now, the volume of shares traded last week fell from 983 million on Monday to 627 million on Friday. Another thing worth mentioning is the trend is up. However, not all stocks are participating equally in this bull run. Note that when price go up but volume goes down, it often means that the big players like the institutional buyers are slowing their buying. And this is actually called momentum slowing. And chances are it's more of retail investors buying up in the market right now. So let me quickly remind us of what is still driving this uptrend. Number one, FTSE Russell restoration, which has led to sustained foreign investors' confidence. Number two, successful bank recapitalization, which indicates banking sector strength. Number three, lots of companies declaring dividends and increasing the dividend per share. Number four, strong Q1 earnings from banks and the industrial sector. Number five, industrial demand. For instance, Lafarge and CAP did great numbers last week. Number six, consumer defensive rotation. Well, for instance, Unilever and NASCON has been very bullish as of late. Number seven, bullish season in the oil and gas sector due to the tension in the Middle East. The Iran-US-Israel war. So now, what are the risks to look out for? Number one, which is very important, accelerated sector rotation. What does that mean? It means, for instance, now, if money flows out of the banking or industrial sector, market could correct. Number two, profit taking wave. Well, after like 45%, year-to-date profit, investors may begin to lock in gains. And this could very well mean correction in the market. So my advice is stay invested in strong stocks like bank stocks, industrial and consumer goods sector, likely the oil and gas as well. Avoid weak sectors. Secondly, take profit on big winners. If you made gain, you had better start taking profit right now. So if you're investing for like 3 to 5 years, basically if you're a long-term investor, last week just added the 3.94% to your portfolio. That's like a great step in the long journey, in your investment journey. So now let's see my stock recommendation for this week. Number one, Sterling NG, which is Sterling Bank. Accumulate Sterling Bank. Buy Sterling Bank very well. That's what I mean. So number two, FCMB. FCMB is a good one to buy, but profit taking is currently going on. So hold on for FCMB. Number three, Access Corp. Well, Access Corp, hold on as well because profit taking is also ongoing in Access Corp. Number four, Fidelity. Yeah, Fidelity is a good one to buy. Number five, Dangote Sugar. Dangote Sugar is another good one to buy. Number six, Nigeria Berries. Nigeria Berries is a good one to buy. Number seven, ICO. Well, ICO is currently consolidating, but it's a frustration kind of consolidation, such that basically the reason for it is the recent rise in the ASI has made lots of investors focus more on banking stocks, oil and gas stocks, and industrial stocks, totally neglecting the insurance sector. So that is what has contributed to the frustration of ICO, such that it has been consolidating for this long. So ICO will still continue its consolidation. However, it's still a good stock to buy. So watch out for ICO. So that's all I have for this week. Do not forget to support the channel by liking the video and subscribing to the channel. Thanks and see you in the next video.